Ladies and gentlemen, good day and welcome to Talbros Automotive Components Limited Q4 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director of Talbros Automotive Components Limited. Thank you, and over to you, Mr. Talwar.
Thank you. Good afternoon, everyone, and a very warm welcome to our Q4 and FY24 earnings calls. On the call today, I'm joined by Mr. Naveen Juneja, our Director and Group CFO, and SGA, our IR advisory firm from Mumbai. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has seen it. Let me begin with the industry and the economic overview. In FY23-24, a total of 23.8 million vehicles were sold as compared to 21.2 million units in the previous year, showing a growth of 12.5%. Sales improved across all automotive segments, and passenger vehicles grew by 8.4%. Two-wheelers, surprisingly, has made a comeback with a growth of 13.3%, and commercial vehicles remained flat. Domestic passenger vehicle segments increased by 8.4%, reaching over 4.2 million units as compared to 3.9 million units in FY23. The PV vehicle segment's sales are led by the mini SUVs and the SUVs, which grew by 26% to 2.52 million cars as opposed to 2 million in the previous year. In the PV segment, the domestic industry sales mix is expected to be largely skewed towards UV in the segment sales mix, with high export volume and increasing share of CNG, hybrid, and EV in the fuel mix. Two-wheeler segment increased by 13.3%, reaching 18 million units. Growth was particularly robust in the two-wheeler segment and expected to have a significant potential to grow, primarily driven by expected revival in rural economy and the trend towards urbanization by OEMs. EV sales in FY24 witnessed a strong increase of 41% despite subsidy cuts. Total EV registrations have surpassed 1.6 million units in FY24 as compared to 1.1 million in FY23. EV penetration rate increases to 6.8% in FY24. Passenger cars in the EV segment have shown double the growth as compared to last year. Talbros had good opportunities for growth and expansion in the EV space, as the revenue contribution from EV this year stood at 3% as compared to 2% in the previous year. We are pretty much present in all your Tata Motors EV vehicles, as well as some very prestigious EVs in overseas as well. Coming to company performance, FY24 has been a very strong year for Talbros Automotive. At a group level, including all joint ventures, at 100% value, the company achieved a revenue of 1,258 crores, a growth of 21% year-on-year. Over the last year, in July, Talbros received orders worth 400 crores from both domestic and overseas customers across its business divisions, product segments, and JVs. These orders are to be executed in the next 5 to 7 years, which also includes a multiple EV order of 205 crores from leading OEMs. In November 23, we received another multi-year order of about 580 crores from both domestic and overseas customers across all our business lines. And this includes an export order of 415 crores and multiple EV orders of 270 crores from the leading OEMs, which have to be executed in the next 5 years, covering the product lines of a company: gaskets, heat shields, forging, chassis, rubber hoses. Last month in April, we received a very large order from a new OEM in Europe for about 1,000 crores. This will come from our joint venture, Talbros Chassis Systems. A very prestigious order. This order is going to commence by Q4 of this year, and this will be supplied to conventional ICE vehicles and the new age EV platforms for EMEA and NAFTA regions, taken to Europe and to South America. Capitalizing on consistent order inflows from the leading OEMs, we anticipate a strong upward trajectory in our business and profitability. Also, the orders will help us increase our share with the existing customers and new customers across geographies, thereby gaining market share in the coming years. We are determined to increase our exports from 25% to 35% in the next 3 years, with a focus on gaskets, heat shields, forgings, and the Marelli joint venture. Our gasket division had shifted its focus towards heat shields a year ago, and it is extremely demonstrating a good performance in FY24, where the heat shield revenues came to 44 crores. We have a strong order book in the heat shield division from strong clients like Maruti, Kia, Hyundai, and also now trying to work with Tata Motors, and not to mention, we're pretty strong with one of UK's largest Jeep manufacturer. We are at an inflection point for our joint venture. Our Marelli Talbros Chassis joint venture, expanding focus on export and on EVs, is also entering into large suspension products, increasing its customer base and also reaching economies of scale as it gets bigger and bigger, with a new plant expansion happening in Pune as we speak. In January 2024, we have concluded disinvestment of 40% ownership interest in our joint venture entity, Nippon Linkless Talbros. This decision is consistent with our long-term goals, as the proceeds will be invested in future capital expenditures and high-growth businesses such as forging or chassis, and even in gaskets. The trend towards EV is expanding, and we've also strengthened our EV portfolio, securing orders from both domestic and overseas OEMs, and expanding our focus on EVs through our JV Marelli, and from a standard business, the forging business. Also, we are in the process of working something significant through our gasket division, also in the EV space. We're committed to our vision to becoming a global leader as an automotive components manufacturer. In the process, as we embrace and celebrate the milestones achieved so far, we aspire to sustain our growth while advancing the future by being relevant to the services we offer. Furthermore, to make the most on the growing opportunities in both domestic and global markets, we shall maintain our diversified and hedged position as a prime provider of auto components and adhere to a pre-established strategy for augmenting our product line through introduction of value-added products. To conclude, we are pleased with our strong financial results and optimistic about the future of the automotive industry. We remain committed to innovation, operational excellence, and delivering value to our customers and shareholders. With this, I request Mr. Juneja, who is our Group CFO, to give us the financial perspective. Thank you.
Thank you, Anuj. Good afternoon and a warm welcome to all the participants. Let me begin with the financial overview. Our total revenue for Q4 of FY24 stood at 203 crores as against 175 crores in Q4 of FY23, a growth of 16% on a YOY basis. For FY24, our revenues stood at rupees 791 crores as against 653 crores, a growth of 21% on YOY basis. EBITDA for Q4 FY24 stood at 36 crores as against 27 crores, a growth of 32% on YOY basis, and for FY24, EBITDA stood at 127 crores as against 94 crores, a growth of 36% on YOY basis. EBITDA margin for Q4 FY24 stood at 17.1%, and for FY24 it stood at 16.1%. PAT before exceptional gains for Q4 of FY24 stood at 22.7 crores as against 16.9 crores in Q4 of FY23, a growth of 35% on YOY basis. And for the financial year 24, our PAT stood at 82.9 crores as against 55.6 crores, a growth of 49% on YOY basis. ROC for FY24 stood at 20.4% as compared to 16.5% in FY23. ROE stood at 20.2% as compared to 16.6% in FY23. Debt to equity ratio now stood at 0.616x for FY24. In the gasket division, I'm coming to the division wise. The gasket division for Q4 FY24, our standalone gasket sale was 128.3 crores as against 115.8 crores in Q4 of FY23, a growth of 11%. Sorry. For FY24, our standalone gasket sale was 502 crores as against 427 crores in FY23, a growth of 20%. This segment saw a EBITDA of 23.5 crore in Q4 of FY24, and for FY24, this segment saw a EBITDA of 81.5 crores. Now coming to our forging division, in Q4 of FY24 grew by 26% to 74.4 crore as against 59.2 crore in Q4 of FY23. In FY24, revenue grew by 26% to 276.3 crores as against 219 crores in FY23. EBITDA in Q4 for FY24 grew by 17% to 12 crores as against 10.2 crores in Q4 for FY23. In FY24, EBITDA grew by 39% to 47 crores as against 33.8 crores in FY23. Now coming to our JV company, Talbros Chassis System Private Limited, our revenue for Q4 FY24 stood at 70.6 crores versus 54.8 crores in Q4 of FY23, registering a growth of 29% on a YOY basis. For FY24, revenue stood at 259.9 crores versus 209.8 crores, a growth of 24% on YOY basis. Now, for Q4 of FY24, our EBITDA in this division stood at 10.8 crores as against 9.2 crores in Q4 of FY23, a growth of 18% on YOY basis. For FY24, EBITDA stood at 36 crores as against 25.9 crores in FY23, a growth of 39% on YOY basis. Now coming to our joint venture, Talbros Private Limited, revenue stood at 31 crores in Q4 of FY24 versus 28.9 crores in Q4 of FY23, registering a growth of 7% on YOY basis. For FY24, revenue stood at 122.5 crores as against 85 crores, a growth of 44% on YOY basis. Going further, for Q4 of FY24, the EBITDA in this division stood at 2.7 crores as against 4.1 crores in Q4 for FY23, a degrowth of 34%. That I already explained in earlier calls that due to some shifting issues, this has happened. Now the things are stabilized, and hopefully the things will be very bright in the next financial year. For FY24, EBITDA stood at 9.3 crores as against 7.2 crores in FY23, a growth of 30% on year-on-year basis. The Board of Directors have recommended a final dividend of 0.50 per equity share of face value of 2 rupees per share, which is 25% of face value, Total dividend for the FY24 stood at a rate of 35%, stood at 0.7 rupees per equity share, including interim dividend of 0.2 rupees per equity share. Now, looking ahead, we see various opportunities for sustained growth in the automotive industry. The company has made substantial investment in new technologies, expanded its capacities, diversified its product portfolio, broadened its customer base, and entered additional markets. Talbros is confident that these initiatives will drive long-term growth for the company and position it to take advantage of future opportunities in the industry. This is all from our side, and I will now like to open the floor to question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to join the question queue, please press star and 1. The first question is from the line of Jiten Parmar from Aurum Capital. Please go ahead.
Yeah, good afternoon. Congratulations on a good set of results, Anuj and the whole team.
Thank you.
My question is on the capacity utilizations for our divisions, like for gaskets, forgings, and the Marelli and the Marugo JV. What are the capacity utilization we are running at each division?
Okay, I will give you that also. Just a second, please.
Okay.
I want to sheet in this regard.
And while, if it is ready,
Our capacity, already I'm telling you, is around 90% in casting and inch division. And it's with me. 90% in forging division is around 82% to 85%, depending on the product mix. In nipple nickel, around, it's not more there. Anti-vibration, it's around 80%. And Marugo rubber, there are two divisions, anti-vibration hoses. In both, we are touching around 90% capacity utilization.
Okay. So my next question is, since we are, 80 to 90% kind of utilizations on each, when do we need to, basically enhance the capacity? And what is if you can throw some color on that?
Yeah, we are already in the process of enhancing in the gasket and heat treat division. Already, we have taken up a new premises on rent in Jharkhand area of Pune. And the supply will start from there in the month of July onwards, hopefully. In the month of June, July to August, it will start supply. And my plan for capex in this division is around 20 crores for this year. Already started. Capex are already started. In the forging division, we are enhancing our capacity further in machining and in some related equipments. And our hammer, which we set up in the last quarter of the last financial year, 350-ton hammer, I think it has started, the trial run already started last week. And the commercial production will start within 1 week. And we are anticipating around 30 crore of capex in this division in this financial year. Marelli, for which we just explained that we got a huge order. The Pune plant is already under construction. It's in services adjacent to the existing plant. And that shed will be ready by September, October. In the meantime, we have already started ordering the machine. We are anticipating a capex of 62 crores, 60 to 62 crores in that division. And Marugo, we are anticipating a capex of around 6 crores in this division. Already, the order has started for that. Take care of our enhance our capacity and to take care of future order which we already have in our hand. Thank you.
Okay. So all this CapEx, it will take us, basically how much time for that to ramp up to these kind of utilizations? And just to get the revenue potential from all this CapEx.
We are expecting that the CapExes will be, I think all the CapExes will be taken care by the third quarter of this financial year. Already started, because we expect industry to start, because this quarter, you know that because of election, etc., is not very, very vigorous. We expect that it will start from second quarter onwards, and by that time we'll be ready with the capacity. We are expecting the last 2 quarters will be very strong in this financial year.
Oh, okay. Now, my second question is on margins for the Marugo JV. They have declined. Any reason for that?
Now, next year you can see a change. We expect a EBITDA margin of 9 to 10% in this division next year.
Okay. And final question is basically on the raw material situation. Raw material prices might have increased, so how are we mitigating that, and what effect will it have in the financial year?
The prices of the export products by freight has increased because of Red Sea issue, etc. And we already start negotiating with our suppliers, and we're hopeful we'll recover that in next financial year. Already working.
So how much is the lag effect for us to pass on to the increase this thing, or we have a back-to-back?
We take the average out for last every quarter we take out the average and the recover.
Okay, great. Thank you so much. If I have any more questions, I'll come in queue. Once again, congratulations. Thank you.
Thank you.
Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Riham Goel from Spark Capital. Please go ahead.
Hi, am I audible?
Yeah.
Okay. Congrats once again for your great results. But I have a question regarding your industrial segment and what their contribution is to your gasket revenues. And how do you plan on expanding? Yeah, you make industrial gaskets as well, right?
Yeah, it's very small.
Very small.
Maybe 8 to 10 crores. It's small.
Okay, can you put a percentage to it, or is it too tiny to?
It's around 2% of the division.
Okay, all right. Another question I had regarding, so basically exports graph has showing really good numbers, and export auto components are going to increase in the coming years, versus in India it's sort of seeing a cool off. So how do you plan on increasing your exports, and how do you plan on dealing with the decreased demand in India?
Export, because planning to, already we have got export orders from various customers, you know that. Already in the pipeline, we in the process of developing that. But the same customer give us more order. And their volume keep on increasing. And in fact, that order mainly got, it's a deemed export. We supply to their customer in India, and they will take delivery from our premises. And it's a deemed export, not direct export. It's a huge, and it will be around 1,000 crores is a deemed export business for us. So we are, it's a deemed export. We will cut the invoice in Indian rupees, and they will take the material directly to there. So destination.
Okay.
It's not.
We have a lot of
supplying directly.
We have a lot.
They will take it, and they will supply to their plants worldwide of their own. It's a deemed export. If I add that, it's about 35% next year. Up in 25-26 onwards, I can show you.
All right, okay. Thank you. And I have a third question, if that is okay.
Yeah.
So there's a shift in the market from ICE to hybrid. Do you see the shift directly from ICE to hybrid? What is your opinion? Do you see ICE to hybrid or ICE to EV? And if it's directly to EVs, then how will that affect your top line?
First of all, ICE to hybrid, no change. Okay?
Okay.
The more hybrid, the more component will grow. No issue. Coming to IC, we are not putting components IC also. My forging division is putting IC, even gasket is putting its component IC. But the value will be not...
EV.
IC is EV. So we are there in... Now you can see that my 3% of total top line is EV. which is around 40 crores. If I take total 50, approximately 3%, you can take around 40 crores EV. Now I have got the orders, huge order of EV vehicles are with gasket division also, and my forging and Marelli. The vehicles for which we have got export order are being launched in 25 and 26 only. When they will launch, the component will go.
Okay.
So our products, as what Naveen mentioned to you, that we don't get affected whether ICE, hybrid or EV, because we are constantly innovating and putting our products in EV vehicles.
Yeah.
All right. Okay. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah. So thank you for the opportunity and sir, congratulations on the stellar set of number. So my question is on the order book side, like if we have 1,000 crore of orders, so that include EV also, and how much is the EV order book?
Naveen, you have the breakup with you?
I have got the breakup of last three orders which I got from last July till now. I have a breakup. Out of this 2,000 crores of order which we have received from last year till last month, for last 1 year, out of it 475 crore is EV. Okay? And 415 crore is about export. This order of Marelli, it is a deem export. It will go in both. We are not aware how much it will go to IC, how much it will go to EV. We have no details available with us as of today. Okay, but it's the component which goes in both the type of vehicles. There is no change in that.
Okay. And sir, as we have mentioned in the presentation that we are targeting 13% CAGR by 27, and also you mentioned the category segment-wise top line. So, like, what are the strategy and what are the positive thing that we are seeing, and which are the OEM from where we are seeing very good order book? So if you can explain on that point.
Now, as we say, division, we mentioned a top line of around 700 crore, I understand. Is okay? Is right? We already achieved 500. We have still 3 years to go. And here we are working with some export customers. I think we are in the process of closing some good orders from those customers for EV space. I think in the next 6 months we'll be able to have some big order from them. Plus, in the Indian front, we are just entering Mahindra in a big way now. We will start developing heat shield and gasket for them, and hopefully in next 1 year you can see a huge jump in that. Plus a normal growth of 8% to 10% of business, which will easily cross 700 crore there. Easily. Now coming to my forging division. Forging division, we anticipated I think 500 crores in this business by FY27. And last year we closed at 276 crores. It has a huge backlog of product developments. We are working on that. We are getting very good order. Order book is lying with me for JCB, for Dana, and Meritor. We have just concluded the audit I think yesterday only. Plus other customers, we are sitting on my head to expand their portfolio. And we expect this business to grow about 25-30% per annum on the basis of the order book they are having. Plus the potential order, we are working on that. The only problem is product development time. That is the only issue here. Now, I think in Marelli business, we anticipated a top line of 700 crores. Last year, they closed about 270 around that, 260 or 270 crores. With the order of this order we have got of 1,000 crores, you can see a exponential growth from 25, 26 in the business. And we are hopeful that we will be able to achieve this 700 crore very easily. I think next year, they will be 300 something. After that, they will be 500 plus with the order book they have got. And coming to Volvo, last year we closed 121. This year again we are